Hey guys, welcome to a Retire with Less series for the month of February. If those of you who are new here, what this series is all about, I've been doing this for over a year now. This is basically poo-pooing in the face of the industry telling you that you need millions of dollars to retire, right? That blanket statement really is a disservice to people. Right, it's a disservice to people like myself and like a lot of people. I would say the majority of people that will probably never get to that $1 million status. Right, the financial engine needs people to work. Period. Right, all walks of life. But that is a very big disservice in my opinion, because a lot of people like myself that have made an average of like $30,000 a year over my lifetime will probably never get there, right? It's just not in the cards. So what are those options for us, right? Because why I say it's a disservice is because a lot of people may just kind of just throw their hands up and just decide, you know what, I'm going to work until I drop, right? So what I ventured out to do is create paper portfolios, right? I created two. They both started out with $250,000. Now that is a lot of money. That's a lot of money to me, right? But it's, a lot more in grasp, right? It's a lot more attainable or, believable in a mind of somebody that has, made $30,000, $40,000 a year for their whole life, right? It's a lot more comfortable, right? To say, okay, $250,000 and I can generate a good amount of income each and every month. And that was the goal of this, was to try and help those people and open their eyes that there is a way, right? You don't have to work till you drop, especially if you don't like to. If you don't have to work till you're 75 years old, unless you want to. And there's nothing wrong with that either, right? So what this was two portfolios with $250,000 each. And we started doing some strategies with covered calls, buying stocks and things like that. We had one side that was just QYLD, generating income. And now my favorite that this has evolved in is cash secured puts, basically kind of the wheel strategy and the options arena. Right. And I'm going to make this a little bit short because I kind of expanded on the number section. So I'm going to make my PSA a little bit short here. But it's been working. Right. I've got over a year's worth of work here. And I'm going to continue running these paper portfolios until they break. Right. We're having some very volatile times in the market right now. And we're going to see how these play out. I recorded this second half here on Tuesday, and now the market's still continuing to drop. So this might be a challenging month come March when we do this again. But that's the point of running this paper portfolio, right? Is to see where the holes are, see what happens during market corrections and things like that. So I hope you enjoy. My main message is don't listen to the experts with their blanket statements. Find out what you need, right? That's what's important. Because when they say you need millions of dollars to retire, they're not talking to you. They're really not, because they don't know you. They don't know your situation. They don't know your expenses. They don't know how you like to live, right? And so that's the most important part, is finding out what you need out of retirement. Okay. Now, if you're new here, please like, share, subscribe, do all that good stuff that I say in every single video. Down below are links that you can use to support the channel. I would greatly appreciate that. Let's just get into it. Hope you guys enjoy. You guys have a great weekend, and we'll talk to you later. Let's get to it. Hey guys, so I'm recording this. I probably just said it, but I'm recording this before my PSA rant, right? So what we're going to go through is my thought processes of how I put on the trades for the paper portfolio. Okay, we're going to look at charting a little bit and how simple I try to make it, right? And I just run through my thought process and see how this works. Now, this is Tuesday, February 22nd. I probably should have looked at these trades this morning when the market was down. I think the market's pretty flat. Obviously, there was talks about a lot of volatility in the market with Russia and Ukraine. But that didn't seem to play out. Maybe it seems like the market's just waiting, right? So with that uncertainty, what do you do, right? And that's why I like the cash secured put side of this portfolio, because it gives you options, and you are not exposed very hard or very large to the market. And I'll go through and explain that a little bit here. So what we're going to do is just do a quick review of how the contracts ended up for January, and then we'll get into what we're going to do for February. Okay, so what we got on the screen is last month's January 2022 retire with less series spreadsheet, and you'll see we had a strike price on TNA of $40 and a strike price of QQQ at $300. And on February 18th, neither one of those were at that price, so those contracts expired worthless, and all the money that we collected, which was right around $1,800, it's just that we get to keep it. It's all profit. Okay. So now all that cash that we used, which was $132,000 that we used to secure those contracts, is essentially unsecured now. It's just cash, right? So we had cash of $248,926, but we had $132,000 that was used to secure those cash secured contracts, put contracts. So we had $116,926 in cash minus the secured portion. We still had the cash, but it was just earmarked, if that makes sense. So now that those contracts expired worthless, the cash is now all back, and we are sitting on $248,926 in cash on this side, plus the 2,000 shares that we have in RYLD. So let's take a look at February and see what we're going to do now. I've already taken the liberty to look at some of this, and I think we're going to switch up the TNA ticker. Now, if anybody's not familiar, TNA is a triple leveraged small cap Russell 2000 ETF, and it represents the performance of 3 times the performance of the index. So up or down, it's going to go 3 times better. So if it's up 1%, TNA is going to be up 3%. If it's down 1%, TNA is going to be down 3%. Okay, roughly. It doesn't always track, just exact, but it's pretty close. Now, this month I've decided I'm not going to do TNA, but let's talk first real quick about QQQ. Now, what I end up doing is I go and look at a chart, okay, and I use Fidelity for that. So I already got it pulled up here. QQQ right now, as of February 22nd, 2/22/22. Interesting. QQQ down, 0.7%, not a big deal, sitting at $339.11. So I scroll down here and I look at a chart. Does the advanced chart make it bigger? Let me look here. Yeah, let's see. It kind of does. But I don't know if my face is in the way, so let me bring that over a little bit. So we'll see that the chart, okay, let me turn off this support and resistance real quick. Okay, we got 338 right here. It is sitting on support right now. What I mean by support is typically what you'll see in a chart is kind of consolidated price action, right? So right here, you'll see the Q's kind of traded sideways. It didn't go further down than it did, and it popped back up. So if we follow that, it's sitting on support at about 340-ish. So if we follow that back, it happened here too as well. So got to that 340, popped up, got to that 340, and then pop up and went on a run. Same thing over here. Went to that got to that 340, went down, popped up to that 340. So it's sitting on support is what it's saying. So now what I think about is what happens next. Like if the 340, if this falls apart and it doesn't hold this support level here, where does it go next? So what you do is you look for more of that kind of sideways consolidation, right? And if we look here at the 320, you'll see that same thing, you know, right in there, right in here. Like it, I mean, it went down below it, but it popped right back to it, right? It went down to 300, popped right back up to 320, you know, went back down to 310, popped back up to 320, went up to 340, back down to 320, and popped back up. So 320 is probably the next level of support. Now, if you wanted to be real cautious because of the state of the market right now and the uneasiness, right? You could look at what's next. Well, what's next could probably be, you know, this next level down here, which is 300, right? Or even 280. After, you know, 260, it kind of gets really ugly because it's you know, pretty much all the way down to March 2020 lows, and that's like a 50% drop, and I don't think it's going to get there. But so with that thought, like Fidelity has a technical analysis. You can click on support and resistance, and it'll draw you those lines, but it'll only draw you those lines to where you tell it to, like 250 day. What's the 250 day support and resistance look like? And it's showing 340 as the support. Well, we're already below that, but you know, it's not over yet. It could pop up and hold that 340 as long as it's in that range. But you can also look at, okay, what's the longer term? Let's see, what does it say for that? 334. So I said the next level was 320. They say 334. Yeah, I would probably be more comfortable with the 320. Okay. So now we got a choice to make, right? We go over to the option chain, and I'm going to bring you down into Interactive Brokers here, and we're going to look at the option chain on March 18th because that is the next regular expiry. That's what we want to look for, is the regular expiry. I'm doing this in monthly chunks in this series, okay? So we'll look at the March 18th. That's only 24 days till March 18th. So it's a short month for options. And we'll see, we pick out the 320. You'll have to zoom in. You guys on the phone, I'm sorry. It's just the way this is. If we look at the 320, it's giving you about $5.40 or $540 per contract sold. So for every contract that you sell, that you're saying you would buy QQQ at $320 a share, they're going to pay you $540 for that option. Okay. Now, like I said, that's the next support level is 320. The next one, in my opinion, was going to be right around the 300. And if you went to the 300, you'll get less money because it's more, you know, safe, right? So that one's paying you about $215. So here's my thought. Okay. The market's shaky. Okay. Let's go back to this. With this account on this side, the cash secured put side, you're sitting on $248,000 in cash, not exposed to this market at all. So you have a lot of options here, right? If you're not comfortable with being in this market right now, right? You don't have to do a thing. You don't have to do a thing. You can pull out your 2,600 or whatever. Well, we got $464 from RYLD, so we really only need about $2,200 to, because we're saying our income need here is about $2,600, right? Might need to change that with inflation, but it doesn't matter. It's just, at least we're generating money, right? So you need about $2,200 if you needed 2,600. You can just pull it from your cash. You don't, as an option seller, you don't have to make a move here, right? Especially when you're sitting on this much cash. If you feel uneasy about it, then don't make a move, right? You can just wait till next month and then live to fight another day, right? It's only going to cost you $2,200 out of your $248,000 stash, okay? But what I'm going to do is I'm going to split the difference, because I said 320 was the next level support, and after that is 300. So I'm going to look at this 310, okay? And I'm going to sell about 3 of those. Okay, at 310, they're going to, let's go to the mid price here, and it shows about 300, and we'll say $340, okay? So I'll sell about 3 of those just to participate in the market, right? So we'll go, the strike price is 310. Let's do 3 of those contracts, right? So it's going to take $93,000 to secure those contracts. And what I say we were going to get for it, $3, and let's call it $340. So income per contract, $340. Okay, so that gives us $1,020 in income deposited right into our bank, and we can spend it right now. Now, as far as TNA is concerned, I'm going to go with SOXL. Okay. Why did that turn yellow? I got a conditional there for some reason, but SOXL is 3X semiconductors. So let me type that in. Semiconductors. Sorry, I'm not a typer. Now, SOXL, we're going to go run through the same thing, right? I did not like TNA at this moment. I didn't like the chart. Let's go look at TNA, and I'll tell you why I don't like the chart. So let's look at TNA selling at 58.20. If we look at this chart and we see the support level is right around, I don't know, 50 maybe, but it's extremely weak. And if you look beyond that, it's kind of a free fall. It's kind of a free fall. There's no real good sideways action there that's building support level. Okay, the next one down is probably like $30, right? Let's take a look. Let's see what Fidelity says. Okay, it's saying sitting on support right now, but let's look at the long-term action. Oh, there you go, 35. Okay, it's saying the next level of support is 35, so it's way down there, and that's why I'm not going to choose TNA today. I'm going to use SOXL. And like I said, semiconductor 3X shares. Now, the reason why I use these sometimes is kind of a yield boost, right? When you sell these, instead of, like a QQQ that takes $32,000 to secure a contract, right? This would only take, like $3,000 to secure a contract. Now you're saying, why not just use this? Well, it's about diversification, and it's about your level of risk tolerance, because the 3X shares extremely volatile in volatile markets. So you really have to, I just use this as kind of a little boost, not necessarily, I don't necessarily want to own these, but it's not a big chunk of money at the end of the day comparative to QQQ, right? So let's look at the SOXL chart, and you'll see it had a big fall, and that's fine. let's look at where the support level is, and I would say about $30, because if you see a sideways price action there, sideways price action there, and a pop-up, sideways price action there, and a pop-up. What does Fidelity say long term on it? Oh, that is 500-day. It says we're sitting on support, right? So I would say the next level is that $30 level. So again, let's go over, take a look at SOXL, hit enter. We'll go to March 18th, and we'll look at that $30 mark, right? Because it's showing that it's sitting on support right now, and I'm looking at $30 support right around here. So I think that's fairly safe. And for those, you are getting about say $1.77. So let's go over here, and current share price, let's say strike price, let's go $30. We're going to expire at March 18th, and what did I say, a dollar? Let's say $177 per contract, and let's do 4 of those contracts. That'd be about 12 grand to secure. Yeah, 12 grand. So all in all, now I could do more, you know, if I really wanted to push the envelope to get that to that 2,600, because I don't think this gets up to 2,600. But I'm only needing $105,000 to secure. We're still sitting on $143,000 in cash. So a lot of room here. Let me see. This was supposed to add up, but let's do it here. Let's go equals P2 and P4. What? Whoops, it was supposed to be sum. Equals sum. See, I told you guys I am not wait, that right? Nope, that one. I am not a Google Sheet expert, so right there, $2,192 of income for the month on the cash secured put side. Now you're only securing, you're only needing 105 grand to secure it. You know, you're not bigly. You're not very exposed to the market, right? You got a lot of room with a lot of cash to play with, and so you're short $408. So we'll have to take that out of there, and yeah, I don't think that did the math, but I'll fix that. So we got $2,200, right? In a very, I would say, somewhat conservative manner. The Qs are probably the most risky here, you know, because it could go down, right? If we have more tensions overseas, you know, it might put pressure on the market. But like I said, right, I didn't have to do anything, right? If you wanted to sit out this market, you could sit out this market, because you're sitting on $248,000 in cash. Pull $2,200 out of it, and you'll have, you know, 246 grand in cash. And you can wait a month and see how things work out. I mean, that's why I like this side. Now, all that being said, let's look at the QYLD side, see how it did. Now, QYLD, remember last month we added on 100 shares. They paid out a dividend of 20.2 cents, which roughly about 1% of the share price. And current share price is $19.82. So if that doesn't recover, we're going to probably keep going down in income here. Problem here on this side is there's not a lot of cash to actually take advantage of the dip, right? So if we needed $2,600, you know, we're in trouble here. Okay, you know, like you can see, it only gave us $2,540.80 in income for this month. which is short $95.20. So we had to pull that from our small amount of cash balance here. And, if the market doesn't, if QYLD doesn't recover above the 20s, this could be, pretty much over in a matter of months, right? You could run out of cash here, and you'll either have to go, earn more money or eat top ramen or something like that. This would be okay if you had more money, or if you needed, like, for instance, if you only needed $2,000, right, to live on, and you can reinvest the excess. So last month you would have put $517 back into QYLD, and this month you would have put $504 back into QYLD. That is how you would compensate for the income drop as the share price drops, right? So that's QYLD. Last year it performed pretty well, right? It gave us 35 grand in income. So is it going to repeat this year? I don't know. It's really going to depend on the total market, right? Can the share price climb back up above the 20s? If it can't, this year might be the end of the QYLD side, or we might reformat it in some other way. So that's it. I know this went on very long, especially with the PSA in front. Whatever I said, I have no idea what I said. Hope you enjoyed it. Hope you enjoyed this little bit of a deeper dive into my thought processes and how I look at things, and hope it helps. You guys have a great one. Retire with Less series is going to keep going on. I enjoy it. I'm actually trying to get my way into doing this side of it, even in a smaller version with my smaller account, because it's just simple, it's easy, and I really only look at this, the Retire with Less series part, I only look at this once a month, right? That's it. It's 10 minutes of work. It's a little bit more because I had to explain stuff here on camera, but for the most part, it's 10 minutes of work, and it produces pretty decent income. So you guys have a great weekend. We'll talk to you later. Thanks. Bye-bye.